Hi everyone, welcome to Digital Expert. In today's video, let's discuss 10 fundamentally strong stocks that are at good buying levels. So these stocks were selected based on their profitability, their financial strength, and their operating efficiency. So many of you might be searching for fundamentally strong stocks which are at good buying levels at the moment. The best part is that these stocks are at excellent picks for long-term returns. I have diversified this list of stocks across various sectors to minimize the portfolio risk and have shared insights into what makes these stocks unique and their potential for future growth. So make sure you watch till the end to understand why these stocks are worth considering. Don't forget to subscribe to this channel and share my videos with your friends and family or anyone who might be interested. So let's get started. Also check out this playlist sector-wise stocks. The first stock is a company that is into engineering and manufacturing fluid management systems. This stock manufactures pumps, valves, motors, and hydro turbines. They also work on infrastructure projects like water supply, power plants, and irrigation. The market cap of the stock is 18,365 crores. The stock I am talking about is Kirloskar Brothers. The current price of the stock is 2,331 rupees. Kirloskar caters to a variety of industries from construction and irrigation to oil and gas, water management, marine, defense, and retail pumps. Their products are used from large industrial applications to hydro turbines and even pumps for everyday household and farm use. They have 14 manufacturing facilities, 9 in India and 5 abroad. Their revenue comes 67% from India and 33% from exports. They're also investing in digital tech like virtual reality, artificial intelligence, IoT, and even 3D printing. Price to earnings ratio is 46.51. Lower than sector P ratio 51.86. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 21%. The second stock from our list is a subsidiary of P&G, which operates primarily in the personal care and grooming industry. The company is best known for its shaving products and grooming accessories. The market cap of the stock is 32,485 crores. The stock I am talking about is Gillette India. The current price of the stock is 9,822 rupees. It manufactures and markets a range of products including shaving products, razors, blades, and shaving gels under the Gillette brand and oral care products. So the products which include toothbrushes under the Oral-B brand. The company focuses on premium grooming solutions and caters to both men and women. So Gillette India is a market leader in the grooming segment. Its premium products dominate a significant share of the shaving and oral care markets. India has a young and growing population and awareness of the personal grooming is increasing. So this creates a favorable environment for long-term growth in the grooming market. Being a subsidiary of P&G, Gillette India benefits from the parent company's global expertise, research and development facilities, and established distribution network. Price to earnings ratio is 71.87, higher than sector P ratio of 60.26. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 42%. The third stock is a prominent financial services and technology company in India, specializing in providing end-to-end solutions for asset management, mutual fund services, and other financial institutions. This stock operates in an essential niche of financial infrastructure, making it a critical enabler for India's growing financial markets. So, India's mutual fund industry is expected to grow at a CAGR of 12 to 14% over the next few years, driven by the increasing retail participation and the SIP flows. As the largest registrar for mutual funds, this stock stands to benefit directly from this expansion. The market cap of the stock is 21,551 crores. The stock I am talking about is KFin Technologies. The current price of the stock is 1,247 rupees. So the company offers a range of services which include registrar and transfer agent. So they facilitate investor services for mutual funds, alternative investment funds, and pension schemes. They also provide technology solutions. So they provide software platforms for asset management companies, insurance providers, and corporate entities. The next one is the corporate registry services. So they manage the IPOs, corporate actions, and shareholder records for the listed companies. Global services, they expand into markets like Southeast Asia and Middle East to offer similar financial technology and RTA solutions. The government and SEBI's push for transparency in the market creates long-term demand for reliable financial infrastructure providers like KFin. So KFin Technologies is well positioned to capitalize on the growth of India's financial markets and increasing digitalization in the asset management. The price to earnings ratio is 72.16, lower than sector P ratio of 75. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 24.5%. The fourth stock from our list is a specialty pharmaceutical company. So this stock focuses on branded generic drugs in areas like heart care, eye care, skin treatments and pain relief. This company is known for launching innovative products. So the interesting fact is that half of the products they launch are first of their kind. The market cap of the stock is 35,595 crores. The stock I'm talking about is Ajanta Pharma. The current price of the stock is 2,824 rupees. So Ajanta Pharma's key metric markets include Philippines, Middle East and Africa. Ajanta Pharma's revenue comes from branded generics in India, 31%. Then the generics in the US account for about 22% of their revenue. Branded generics in emerging markets like Asia and Africa account for about 41%. Institutional sales in Africa accounts for about 5%. Ajanta Pharma was the first generic company to obtain WHO pre-qualification for anti-malarial products. So Ajanta Pharma is a growth-focused pharmaceutical player with a balanced portfolio. So in the US, its capability to manufacture complex generics offers a gradual growth opportunity despite the market challenges for the stock. The company is aggressively expanding in emerging markets like Asia, Africa, which will support its long-term prospects. Price to earnings ratio is 40.68, higher than sector P ratio of 37.51. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 23.8%. The next stock is a leading manufacturer of automotive components in India. They have a significant focus on the two-wheeler and three-wheeler segments. The company specializes in aluminum die castings, suspension systems, braking systems, and transmission components. Recently, it has also been focusing on the electric vehicle components, particularly lightweight materials and advanced braking systems. The market cap of the stock is 33,000 crores. The stock I'm talking about is Endurance Technologies. The current price of the stock is 2,336 rupees. Endurance Technologies has a significant future potential due to the rapid shift towards electronic vehicles. Its expertise in lightweight components and braking systems positions it well in the evolving market. So Endurance is also expanding globally, especially in Europe, targeting premium automotive segments. In India and other emerging markets, the growing demand for two-wheelers and three-wheelers further supports their growth. This stock holds importance as Endurance is a market leader with strong relationship with major OEMs like Bajaj Auto and Hero MotoCorp. Price to earnings ratio is 42.90, higher than sector P ratio of 37.37. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 23.8%. The sixth stock is a biopharmaceutical company based in India, primarily engaged in the development and manufacturing of fermentation-based active pharmaceutical ingredients. This company has a strong export-oriented business model with a significant portion of its revenue derived from the international markets, especially regulated markets like the US, Europe, and Japan. The market cap of the stock is 22,990 crores. The stock I'm talking about is Concord Biotech. The current price of the stock is 2,136 rupees. So the Concord Biotech's key focus areas include immunosuppressants, which are used in organ transplant and autoimmune diseases, which is a high demand niche with a limited competition globally. They also provide APIs for cancer treatment drugs, antifungal and antibacterial APIs, which are essential in treating infectious diseases. So Concord's research and development capabilities allow it to launch the niche products with limited competition, supporting profitability and market leadership. They operate in a high margin fermentation based API segment, which is more cost effective and environmental friendly than the synthetic alternatives. So the India's biotech sector is set for good growth due to the increased healthcare spending, rising export and government support for the pharmaceutical and biotech industries. Price to earnings ratio 70.10, higher than sector P ratio of 37.26. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 20%. The seventh stock is a company involved in several business segments, including power generation, ferroalloys, and sugar. Its operations span across India and internationally. The market cap of the stock is 14,845 crores. The stock I am talking about is Nava. The current price of the stock is 1,015 rupees. So, Nava operates thermal power plants and has significant presence in the energy sector, producing electricity primarily for captive use and sale. The company is a major producer of ferroalloys which are used in steel manufacturing. Its operations benefits from backward integration as it produces power, which is a major cost component in ferroalloy manufacturing. It is also involved in the production of sugar and ethanol in India, which is a smaller portion of its portfolio but aligns with India's ethanol blending initiatives. Nava also has coal mining operations primarily catering to the power generation needs. Growing infrastructure development and the demand for steel in India can drive the demand for ferroalloys, benefiting Nava. Price to earnings ratio is 13.01, lower than a sector P ratio of 32.57. Debt equity ratio is lower than 1. Return on equity for the last financial year was 15.4%. The eighth stock is primarily involved in the manufacturing and sale of various steel-related products such as wires, strands, wire ropes, cords, and related accessories. So, this company's products are used across critical industries such as oil and gas, infrastructure, mining, and shipping. So, this company is a market leader in the Indian wire and wire rope space and is among the top 5 leading manufacturers globally. The market cap of the stock is 12,405 crores. The stock I am talking about is Usha Martin. The current price of the stock is 398 rupees. The company produces specialty steel used in automotive, engineering, and industrial applications. Usha Martin also produces other products like industrial chain, pre-stressed concrete strands, and conveyor cords. The government initiatives like the Make in India and the focus on self-reliance in steel could benefit Usha Martin. The increasing investments in the infrastructure could also boost the demand for wire ropes in construction and heavy equipment, which would benefit Usha Martin. The price to earnings ratio is 29.01, higher than a sector P ratio of 26.52. Debt equity ratio is lower than 1. Return on equity for the last financial year was 16.61%. The ninth stock is a leading player in the polyester film industry. The company is also a key exporter with a significant presence in North America, Europe, and Asia. Specialty films are widely used in electronics and packaging, both of which are fast-growing sectors. The market cap of the stock is 12,098 crores. The stock I am talking about is Garware High Tech Films. The current price of the stock is 5,073 rupees. So this company specializes in manufacturing. The first one is Sun Control Films, which are high-quality films for automotive and architectural applications, including heat rejection and UV protection. The second one is paint protection films, which are transparent films that safeguard vehicle exteriors from scratches, dirt, and other damage. The third one is specialty polyester films, which are used in various industrial applications, including electronics, packaging, and printing. The fourth one is laminated films, which are films used for thermal lamination. The automotive industry is increasingly adopting PPF for high-end vehicles, creating a significant growth opportunity. So, Garware High-Tech Films is a leader in high-value segments like PPF and specialty films, which gives them a better edge. The price to earnings ratio is 39.50, higher than sector P ratio of 32.81. Debt equity ratio is lower than 1. Return on equity for the last financial year was 13.7%. The 10th stock is an Indian-based company that manufactures and sells polymer-based products. It operates in various sectors, providing solutions for packaging, infrastructure, automotive, lifestyle, and healthcare. The company benefits from a growing trend towards sustainability as polymer-based alternatives are preferred over traditional materials. The company benefits from increasing demand for clean energy solutions, particularly in the LPG and CNG sectors, where its lightweight, durable composite cylinders are gaining popularity. Government initiatives in infrastructure and urban development also support the demand for this company's products, such as HDPE pipes and plastic sheets. The market cap of the stock is 11,383 crores. The stock I am talking about is Time Technoplast. The current price of the stock is 493 rupees. So let's look at Time Technoplast key business segments. The first is the industrial packaging, such as polymer drums and specialty packaging. Second is the infrastructure products like HDPE pipes and plastic sheets. Third is lifestyle products like water tanks and bins. The fourth one is the automotive components like fuel tanks for commercial vehicles. The fifth is composite cylinders, LPG and CNG cylinders, and healthcare products like medical waste disposal systems. The price to earnings ratio is 31.47, lower than sector P ratio 56.01. Debt equity ratio is lower than 1. Return on equity for the last financial year was 13.48%. If you like this video, don't forget to subscribe to this channel, and thank you for watching.